Something is shifting in crypto, not in small ways either. Bitcoin is staring down its biggest centralization threat in years, with two mining pools tightening their grip on the network. At the same time, a major US bank just made a move that could change crypto payments forever. Meanwhile, the SEC, they flipped the script, signaling a dramatic shift in how tokens may be regulated or not regulated at all by them. This is bullish. And inside the Fed, and that's really the center of all of this right now. All eyes are on Jackson Hole, waiting for the Fed chair's next move here. But a top official at the Fed is warning that banks that ignore crypto could be left behind here. Layer on top of that delayed ETF rulings, a historic crypto IPO, and a market bleeding red waiting on Powell's next move. You start to see a pattern here. The real question is not whether things are changing, it's whether the system itself is about to crack wide open. Now, there's a lot going on and it's not all bad. I know that the market looks bad, it's red everywhere, but you know, we don't work in a vacuum. There's a lot going on in general. I think crypto's looking really bullish here. And you will see during this cycle multiple times people will tell you, oh, it's over. Back to the bear market. And it's not. It never is. We will go to new all-time highs. Well, until it is over. And that will happen someday as well. But not right now. It ain't happening. We didn't come all this way for Ethereum, XRP, and all these other coins to not do any damage. We're doing serious damage. You best believe it. It's just a matter of time. But right now, our eyes are on Powell there at Jackson Hole. What is he going to do? He keeps telling us about macro fears, tariffs. Our corporation's going to absorb these costs or start passing them on, and we start seeing inflation going up again, uncertainty about trade tensions. Fed minutes show real division here. They don't know what they're going to do. Do they leave rates alone? Do they stay restrictive? Or they start pivoting and loosening things up? Now, I'll tell you this. They need to get ahead of this thing and systematically and methodically start bringing that rate down. Do not wait till you have to be the master of panic and start doing 50 basis point cuts. It's ridiculous. Get going now and start slowly bringing the rates down. Crypto lives and dies by liquidity. Powell's words here, they're either going to spark more pain, serious pain, or a massive breakout. Now, I'm no expert in this arena, but I'll tell you this. Once a folder, always a folder. And this guy caved round one, the first Trump term there. You know, he's really going after the chairman, and he caved, he capitulated, he started bringing the rates down. He's going to do it again. This guy is a caver if I've ever seen one. I'm looking for a pivot here at Jackson Hole to show the Fed is going to start easing off and start being less restrictive. We'll have to see it play out. That's the big one. Everyone's looking at that. Bitcoin down, Ethereum down, XRP down, ADA down. We have Coinbase, MicroStrategy looking ugly as you can get. It's not good out there, but if he talks, if he shows a pivot, if we are going to see loosening financial, metrics out here, it's going to be off to the races. And I think that's what we're going to get. The 48th Jackson Hole Symposium has begun with headliners here like Jerome Powell, Christine Lagarde, focusing on labor markets and transition. What will the Fed do in September? How will inflation versus labor risk be balanced? Remember, they had to redo those labor reports. And, this is like a Volcker in 82, a Bernanke in 08. Jackson Hole has always been a market signal flare. What's going to happen? Bitcoin down 2.7%, Ethereum down 5%, XRP down 6.2%. 92 of the top 100 tokens are in the red. Global crypto markets fell to 3.9 trillion. Is this a buy the dip opportunity or the start of a larger correction? Well, that depends on what Powell does here. We will have to see. We have here a crypto bloodbath. We're just waiting on Powell. Again, Robinhood, Coinbase, Galaxy, MicroStrategy, everything from stocks to crypto, especially within the crypto sector. It's all about liquidity and what's going to happen here. Now, the Fed new supervisor. This is big. The Federal Reserve's new supervisor chief turns pro-crypto, says that banks cannot ignore crypto and will play a diminishing role in finance if they do, giving that dire warning. This is Michelle Bowman, Fed Vice Chair for Supervision, supports tailored rules under the Genius Act for stablecoins, suggests Fed staff themselves, they should own a little bit of crypto so they can get to understand it. This is a must for the modern era here. Why it matters? Well, a U.S. regulator, a top U.S. regulator, is echoing the industry's own view. For years, banks have been hesitant. Now the Fed's message is clear: adopt or fall behind. This is a global competition for the future of finance. And now the Federal Reserve itself is sending that message out there that you got to jump in here and you got to adopt this technology. That in its own right is bullish as it gets here. Now, Bitcoin, not looking good here. It faces its biggest centralization threat in years. 51% of the hash is controlled by two mining pools, Foundry USA and Antpool. They now control 51%. If they were to conspire, well, it would create theoretical ability to reorganize the chain, censor transactions, execute double spends. Now, are these two mining pools going to do that? Absolutely not. No way they would do that. But the problem is, it's not about trusting that Foundry and Antpool are going to be good actors. The whole point of decentralized technology is the absence of trust. This is unacceptable and it needs to be addressed. Decentralization at risk. Bitcoin's foundation and crypto in general is decentralization. Even if pools never collude, the fact that such power concentration is possible raises serious questions about Bitcoin's resilience. A trustless system cannot afford trust-based assumptions like I just made, where I told you Foundry and Antpool, well, they ain't gonna conspire. That's not the point. It has to be that they can't conspire, and this has to be dealt with and quickly. It's not great here just to have that risk at all. I bet it'll be dealt with, but it's a problem here. Now, SEC, they put a freeze on crypto ETF decisions at the moment here. SEC has delayed ruling on major ETFs tied to Bitcoin, Ethereum, Solana, and XRP. We have the Truth Social Bitcoin and Ethereum ETFs put off till October 8th. Solana ETFs October 16th with 21 shares of Bitwise, and October 19th, XRP Trust through 21 shares. October can either reshape crypto ETFs or frustrate investors with more delays. I don't think there's going to be any more delays. I think we're going to get approval here across the board, and it's going to be crazy town. This should be post the Fed pivot, and we'll really start ramping up here. October, November, December. That's where I'm eyeing. Hopefully, we really catch some wind under our sails and continue this bull run. Now, SoFi becomes the first bank in the United States really to use blockchain for payments, and they're using the Bitcoin Lightning Network. Now, I'm more bullish about Lightning than most of you out there, but I don't think it's really, for the industry to use at that kind of level. It's good as an ancillary system. But what this tells us is people are going to start adopting these chains. So if you're a fan of XRP, Solana, some of these other XLM, these kind of ones that could be used for payments, this should be bullish for you because it just shows they're going to start dipping their toes in this technology, and it's no longer speculation. It's no longer theory. Banks are using blockchain for payments. Lightning ain't going to scale, not for what banks want to do, at a professional level. It's great for you or me. We want to send some Bitcoin around cheap. Use it. It works great. Use Strike. You'll love it. I'm telling you, Bitcoin Lightning is fantastic, but not for scale, not for industry. It just ain't going to work. But this is just the first move. It's the safe move, but watch them pivot. You're going to see more people jumping in here, doing deals with Ripple, using XRP Ledger and all sorts of, really advanced systems for making payments. It's just a matter of time here. That's a big move there, by the way. And I think most people miss it because it's Bitcoin Lightning Network. It doesn't matter. It's a blockchain-based payment system, and you're going to see people use all sorts of different systems. It's just the first move here. Now, Fed chair signals a dramatic crypto shift. We like to see this. He said the following: just the token itself is not necessarily a security. There are very few, in my mind, tokens that are. So this is quite different than what we heard from Gary Gensler that said, most of these things are securities. SEC launches the Project Crypto for a new digital asset rules. Breaks from Gensler's stance that most tokens are securities. What does this tell us, though? Look how much of a difference it is depending on who the chair is. And we're not always going to have this chair. We need, while Paul Atkins is giving us some breathing room here, we need to punch through some laws here and codify it so it is the law of the land and not up to the discretion of the SEC chair. Clarity Act passed in July, Senate votes for September. Up to 18 Senate Democrats made back pro-crypto regulations. They need the funding. Midterms are coming up. They want that crypto money, and they'll spend it. They're not for one party or the other. If you're pro-crypto, they're going to get behind you and help you. But if you are going against crypto, if you want to attack this technology stack, they're going to bury you. And that's important. We want this to be a bipartisan issue. It doesn't matter what side of the aisle you are on. You want both sides being pro-crypto because that's what's best for this industry. And the SEC, they just flipped the script. Tokens like XRP, may no longer be the rare exception because XRP has the clarity from the courts, but the precedent for this new rule that, tokens themselves are not securities or commodities, and that's the way it should be. Now, if you wrap them in some sort of investment contract, that's different. We're not talking about that. But the token itself, that ain't a security. It's really just computer code at the end of the day. It doesn't get much easier than that. I can't wait to get that permanent in law. Now, Bullish, if you remember this is one of the first exchanges that partnered with Ripple and RLUSD. Well, they just raised $1.1 billion in its IPO. The exchange here, the first U.S. listed where the proceeds were settled in stable coins. So this IPO was settled in USDC, PayPal stablecoin, Ripple's RLUSD. It trades under the ticker BLSH, and cash flows ran through Solana with Coinbase as the custodian and Jefferies as the agent. So very blockchain-centric offering here. Bullish, raised quite a bit of money, so it's a success. Now, this is the problem, and this happens a lot with IPOs, but Bullish fell 6% in the first days here since IPOing. So we got a little bit of a pullback, but part of that is just market conditions and things like that. And plus, when you're IPOing, you want to get as much money as you can to use it to grow your business. That's the point. And, when you're buying on IPO day, it's probably about the worst day typically to buy. It's the most hype and the most incentivized for people that have been illiquid for a long time to now dump a lot of their stock on the market. It's just kind of the way it works. But either way, this is a big moment for crypto. Shows there's a lot of appetite out there. Bullish again raised $1.15 billion that they can use to grow that exchange, a partner with Ripple, and a user of RLUSD. This is exciting. We have a lot to work through. We'll keep an eye on Jackson Hole and Jerome Powell. But, people go, well, all this good news about XRP, why is the price going down? It's just market conditions. Everything's going down. And it is a lot of concern over the job market. What is the actual state of the economy? And what is the Fed going to do? Are they going to be sensible, get ahead of this thing, start loosening conditions, start bringing the rates down? Or is he going to dig in and keep them too elevated? And again, something could break, and that would be bad. We'll have to see. I'm not Nostradamus. I'm no expert in forecasting the Fed, but I just think he's going to fold here and start bringing those rates down, and he should. So you can do it in a very methodical manner. Lower it down a quarter, take a look at things. You can pause or continue on. You can go from there. Just start the process. That's all I'm saying. And I think the markets will react well if he just, again, starts that process of loosening things up. Let me know what you think down below, though. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.